Hi everyone! Welcome to our channel where we break down complex topics into easy-to-understand concepts. Today we're diving into medical expense insurance and explaining 61 key terms that are essential for anyone looking to get their insurance license. Whether you're studying for your exam or just curious about how medical expense insurance works, this video is for you. Let's get started. 1. Actuarial value. This represents the percentage of medical costs that a health insurance plan is expected to cover. For example, a plan with an 80% actuarial value means the insurer pays 80% of costs and the insured pays 20%. 2. Affordable Care Act, ACA, a federal law enacted in 2010 to make health insurance more accessible and affordable. It introduced mechanisms like government mandates, subsidies, and health insurance exchanges. 3. Archer Medical Savings Accounts, MSAs. Tax-advantaged savings accounts for self-employed individuals and employees of small businesses to pay for medical expenses. Contributions are tax-deductible, and withdrawals for qualified medical expenses are tax-free. 4. Basic Hospital Expense Policies. Health insurance policies that cover hospital room and board, miscellaneous hospital expenses, e.g., lab work, X-rays, medicines, operating room use and supplies. 5. Basic Hospital Expense Indemnity Basis. A type of basic hospital policy that pays a fixed amount per day for hospital room and board, regardless of actual costs incurred. 6. Basic Hospital Expense Reimbursement or Expenses Incurred Basis. A basic hospital policy that reimburses the insured for actual hospital costs up to a stated maximum benefit. 7. Basic Medical Expense Insurance. A health insurance policy that provides first dollar coverage for specified limited healthcare services, meaning it pays benefits without requiring a deductible. 8. Basic Physician Expense Insurance. A policy that covers non-surgical services provided by a physician, such as office visits, diagnostic tests, and consultations. 9. Basic Surgical Expense Policies. Policies that cover the costs of surgeons' services and anesthesiologist fees, regardless of whether the surgery is performed in or out of the hospital. 10. Benefit Period. The length of time during which benefits are paid following a loss, or the policy period during which claims are counted against benefit and cost-sharing limits. 11. Bronze Plan. A health insurance plan under the ACA that has an actuarial value of 60%, meaning it covers 60% of typical medical costs, and the insured pays 40%. 12. Cafeteria Plans. Employer-sponsored benefit plans that allow employees to choose from a menu of benefits, e.g., health insurance, retirement plans, on a pre-tax basis. 13. Calendar Year Deductible. A deductible that resets every calendar year. The insured must meet the deductible only once per year, regardless of the number of claims filed. 14. Carryover Provision. A provision that allows medical expenses incurred in the final 3 months of the policy year to count toward the next year's deductible if the current year's deductible hasn't been met. 15. Certificate of Creditable Coverage. A document provided by a group health plan to confirm prior health insurance coverage, which helps reduce or eliminate waiting periods for pre-existing conditions when switching plans. 16. Co-insurance. The percentage of medical costs shared between the insured and the insurer after the deductible is met. For example, an 80-20 split means the insurer pays 80% and the insured pays 20%. 17. Common Accident or Sickness. Deductible. A provision in some major medical plans where only one deductible applies if 2 or more insureds from the same family are injured in the same accident or suffer from the same illness. 18. Comprehensive Major Medical Insurance. A health insurance policy that combines basic medical expense coverage and major medical insurance into one policy, offering broad coverage with high benefit limits. 19. Consumer-Driven Health Plan. A health plan with 3 elements. 1. A tax-advantaged savings account, e.g., HSA. 2. A high-deductible health plan, HDHP. And 3. A corridor or integrated deductible. 20. Conversion factor. Relative value scale. A dollar per unit value used to determine the benefit amount for each covered procedure in a basic surgical policy. 21. Corridor deductible. A deductible that applies after basic coverage is exhausted and before major medical coverage begins. It bridges the gap between basic and major medical benefits. 22. Cumulative or all-cause deductible. This is a deductible that resets annually. The insured must meet the deductible only once during the benefit period, regardless of the number of claims filed. It is also known as a calendar year deductible. 23. Deductible. The amount the insured must pay out of pocket before the insurance policy begins to pay benefits. For example, a $1,000 deductible means the insured pays the first $1,000 of medical expenses. 24. Essential health benefits, EHBs. A list of 10 healthcare services that must be covered by all ACA-compliant major medical plans, including hospitalization, prescription drugs, and preventive care. 25. Family deductible, a deductible that applies to the entire family. It is typically 2 or 3 times the individual deductible amount. 26. Flat deductible, initial deductible. A fixed dollar amount that the insured must pay before the insurance policy begins to pay benefits. For example, a $500 flat deductible. 27. Flexible spending accounts, FSAs. Tax-advantaged accounts set up through an employer's cafeteria plan that allow employees to set aside pre-tax earnings for qualified medical expenses. Unused funds are typically forfeited at the end of the plan year. 28. Flexible spending arrangement. This is the official name for a flexible spending account, FSA. It is a tax-advantaged account that allows employees to set aside pre-tax earnings for qualified medical expenses. Unused funds are typically forfeited at the end of the plan year. 29. First dollar coverage. This refers to insurance policies that pay for claims without imposing a deductible. Benefits are paid from the first dollar spent on covered services. 30. Gold plan. A health insurance plan under the ACA that has an actuarial value of 80%. Meaning it covers 80% of typical medical costs, and the insured pays 20%. 31. Health insurance exchange. A marketplace where consumers can compare and purchase health insurance plans, often with subsidies based on income. It was established under the ACA. 32. Health Insurance Portability and Accountability Act, HIPAA. A federal law that ensures employees can keep their health insurance when changing jobs and protects the privacy of their health information. 33. HIPAA Privacy Rule. A rule under HIPAA that provides federal protections for an individual's health information and gives patients rights over how their information is used and shared. 34. Health Reimbursement Accounts, HRAs. Employer-funded accounts that reimburse employees for out-of-pocket medical expenses and individual health insurance premiums. These accounts are not portable if the employee leaves the job. 35. Health Reimbursement Arrangements. This is the official name for health reimbursement accounts, HRAs. These are employer-funded accounts that reimburse employees for out-of-pocket medical expenses and individual health insurance premiums. 36. Health Savings Accounts, HSAs. Tax-advantaged medical savings accounts available to individuals enrolled in a high-deductible health plan, HDHP. Contributions are tax-deductible, and withdrawals for qualified medical expenses are tax-free. 37. High-deductible health plan, HDHP. A major medical policy with a high deductible and lower premiums. It is often paired with an HSA and is designed to make the insured responsible for basic expenses while providing coverage for catastrophic costs. 38. Impairment rider. A provision added to a health insurance policy that permanently excludes coverage for a specific pre-existing condition disclosed during the application process. 39. Initial deductible. This is another term for a flat deductible. It is a fixed dollar amount that the insured must pay before the insurance policy begins to pay benefits. For example, a $500 initial deductible. 40. Inside limits. These are annual caps on specific covered services, such as $1,000 per year for physical therapy. They limit the amount the insurer will pay for certain services. 41. Integrated deductible. A deductible that combines basic and major medical coverage. Expenses paid under the basic policy count toward the major medical deductible. 42. Internal limits. Annual caps on specific covered services like hospital stays or surgeries. Once the limit is reached, the insured pays any additional costs. Example: a $1,000 annual limit for physical therapy means the insurer pays up to $1,000, and the insured covers anything beyond that. 43. Look-back period. The time before coverage starts during which an insurer can identify pre-existing conditions. Conditions identified during this period may be subject to exclusions or waiting periods. 44. Major medical expense. Insurance. Health insurance policies that offer broad coverage with high benefit limits. They include cost-sharing features like deductibles and co-insurance and meet the ACA's minimum essential coverage requirements. 45. Major medical expense policy. A health insurance policy offering broad coverage for high-cost medical expenses like hospitalization and surgery. It includes deductibles, co-insurance, and meets ACA's minimum essential coverage requirements. 46. Medical savings accounts, MSAs. Tax-advantaged accounts for small business employees and self-employed individuals to pay for medical expenses. Contributions are tax-deductible, and withdrawals for qualified medical expenses are tax-free. 47. Metal tiers for major medical insurance. The ACA requires health insurers to offer plans within 4 metal tiers: bronze, 60% coverage; silver, 70%; gold, 80%; and platinum, 90%. These tiers indicate the percentage of medical costs the plan covers. 48. Non-scheduled plans. Health insurance plans that do not specify fixed benefit amounts for specific services. Instead, they reimburse based on usual, customary, and reasonable UCR charges, which reflect typical costs for services in a given area. 49. Out-of-pocket maximum. The most an insured must pay for covered services in a single plan year. After reaching this limit, the insurer pays 100% of costs. 50. Patient Protection and Affordable Care Act, PPACA. Also known as the Affordable Care Act, ACA, or Obamacare, this federal law was enacted in 2010 to make health insurance more accessible and affordable. It introduced measures like government mandates, subsidies, and health insurance exchanges, while also prohibiting denials for pre-existing conditions. 51. Per cause or occurrence deductible. A deductible that applies separately to each accident or illness. The insured must meet the deductible for each new claim. 52. Platinum plan. A health insurance plan under the ACA that has an actuarial value of 90%, meaning it covers 90% of typical medical costs, and the insured pays 10%. 53. Portability. The ability to retain group health benefits when changing jobs or leaving a group plan. This is often facilitated by laws like HIPAA. 54. Pre-existing condition. A health condition that exists before the start of insurance coverage. The ACA prohibits insurers from denying coverage for pre-existing conditions. 55. Pre-existing condition exclusion. A provision that excludes coverage for conditions that existed before the policy started. The ACA bans these exclusions in qualifying plans. 56. Relative value, approach, scale. A method used in basic surgical insurance to assign a value to each covered procedure. The value is multiplied by a conversion factor to determine the benefit amount. 57. Silver plan. A health insurance plan under the ACA that has an actuarial value of 70%, meaning it covers 70% of typical medical costs, and the insured pays 30%. 58. Stop loss. The maximum amount of co-insurance an insured must pay in a year. It is often used interchangeably with out-of-pocket maximum. 59. Supplemental major medical policies. Policies that add extra coverage to a basic medical expense policy. They often include a deductible between the basic and major medical benefits. 60. Tiered plans. Health insurance plans categorized into different levels or tiers based on coverage and cost sharing. Under the ACA, these are known as metal tiers: bronze, silver, gold, and platinum. Each tier represents a different actuarial value, indicating the percentage of medical costs the plan covers. 61. usual, customary, and reasonable, UCR, a method used by insurers to determine the amount they will pay for medical services. It compares expenses to what is considered reasonable and customary for the geographical area. And that's it. We've covered 61 key terms related to medical expense insurance. If you found this video helpful, don't forget to like, subscribe, and hit the notification bell so you don't miss our future videos. Good luck with your insurance license journey, and I'll see you in the next video.